Good afternoon, ladies and gentlemen. Thank you for joining our third Investor Day series webinar, Legal Insights for Investor, Navigating Debt Fundraising. My name is Karian, and from BR Capital, I will be your moderator for this webinar. And together with me, I have King Sing, CEO of BR Capital, and also a very special guest, Ms. Chong Mei Mei, partners from RDL. Okay. Today, we will be offering 50 pieces of 10 ringgit Zeus coffee voucher for the webinar attendees. And all you need to do is to register as an investor at our website, as you can see here, brcbursamalaysia.com investor. So register as a first-time investor and please complete your registration before 14 March. So once you have completed your registration, please drop us an email at brcsupport@bursamalaysia.com to say that you have successfully registered as an investor. Once your details has been verified, we will actually email you the Zeus coffee voucher within 7 business days from the receipt date of the email. Okay, just a disclaimer, this session is purely for educational and informational purpose only. And also a quick PSA, as we live in an era of incredible digital connectivity, but sometimes it comes with a dark side where scammers prey on the trust or urgency, whether it's a phishing email or fake tech support calls or some get rich quick investment scheme. The scammers are becoming smarter, and also it's very important as an investor that we stay informed and vigilant. This will be the outline of the webinar. So I'll be going through the current opportunities that we have in BR Capital. Then we'll pass on to Ms. Mei Mei, where she will be talking about legal insights for investors and how you can navigate the debt fundraising, and then followed by our Q&A session. So just want to do a quick introduction of BR Capital. BR Capital, we are a digital debt fundraising platform that caters the investors and also the issuers. So issuers can raise funds by issuing the investment note with a minimum issuance size of 5 million. And for investor, whether you are retail investors like myself, a sophisticated investor or institutional investor, you can invest in our notes with a minimum of 100 ringgit. And also, I would like to highlight some of the features on BR Capital. So the notes that we are looking at 6 to 10% per annum, and the tenure of the note that we will offer is range between 1 to 3 years. The profit or interest payment will be semi-annual, and then the notes can be a Sharia compliant or conventional note. And we also have a secondary market where you can buy and trade, you can buy and sell your investment note. So current opportunity. This is what we have done in the past. First of all, thank you for your support. Every campaign that we have launched has been fully subscribed. And today I will go through with you some of our past campaign. For example, Project Coin, they are one of the largest laundromat operator in Malaysia, an unlisted entity, and they issue a 2-year Islamic note with a profit rate of 7.65 per annum. You can see they have done tranche 1 and tranche 2, both achieve 100%. We also have Project Everest, a major automotive player under a listed group. For tranche 1, they offer 7% for 3 years. And also tranche 2, 1 year with 6.5% per annum. And lastly, we have Project Eco. They are an environmental solution provider offering a 6.8% with a 2-year tenure. Okay, so this is what we have, Project Coin Tranche 3. So with the success of Project Coin Tranche 1 and Tranche 2, the issuer is offering the Tranche 3 for the investor to raise 5 million, total amount of 5 million. The profit rate of the note is 7.65% per annum for 2 years. The issuance is rated R4 by RAM. And also this R4 indicate adequate safety for payment of financial obligation. So if you wish to subscribe this campaign, the minimum investment amount is only 100 ringgit. And then how you can do, you can register yourself as an investor, top up your wallet, and then you can subscribe to Project Coin Tranche 3. So without further ado, I will then pass it to King Sing, as CEO of BR Capital.
Thanks, Kai-Yan, for the intro. Kai-Yan, next slide, please. So, good afternoon, ladies and gentlemen. I'm King Sing from BR Capital. Before I intro our special guest for today, I just want to mention that we have been organizing several Investor Days webinars since last year. Really, our primary intention is to facilitate investors to make an informed investment decisions while investing on our platform. So in this respect, the core theme of our Investor Day series can be really broken down into 3 segments. First, we have Know the Issuer series, where we invite senior management and major shareholders of issuers to give a bit of background of their business and future plans. And also, we constantly encourage our future issuers to come on to our webinar, really for investors to know them a bit better. More importantly, transparency matters. Know what you are investing in. The second core part of this, our Investor Day series, is we want to focus on subject matter expert. We invited RAM Ratings to give an overview of credit rating process. We also invited Bond Pricing Agency Malaysia, or BPAM, to give a market and economic outlook. And today, we are inviting a subject matter expert from the legal field. So why legal, you may ask? BR Capital is a debt fundraising platform, and the debt financing is very much a binding legal relationship between a borrower and its lender or investors. So for us at BR Capital, we believe it's important for investors to know a bit of broad legal concepts while investing in our platform. Of course, the last part of our webinar series is that we want to update the investors on our latest features. Especially last year, December, we launched our secondary market. And also, as what Kai-Yan just mentioned, is the current opportunities that we're currently offering, just to give a sense to investors what's out there on BR Capital. Kai-Yan, next slide, please. So, without further ado, let me introduce our special guest speaker. Mei Mei is a very experienced legal partner in the corporate and commercial space at Darryl Loh, or in short is RDL. Her client is really from diverse industries such as fintech and peer-to-peer, P2P financing. So in recognition of her expertise and experience, Mei Mei has been top ranked in Band 1 by Chambers Fintech in the last couple of years. She was also listed as one of the commended external counsel Malaysia for 2022 to 2023. And for 2024 by the in-house community, a community of in-house legal professionals in Asia and Middle East. So with such vast credential, we are very honored to have her present in our webinar today. Welcome, Mei Mei, and really thanks for coming. The floor is yours. Thank you.
Thank you. Thank you so much for the lovely introduction, King Sing. And good afternoon, everyone. Thank you for joining us today. As introduced by King Sing, my name is Mei Mei. I'm one of the partners from Darryl Loh. I practice in corporate commercial law. I'm also a fintech partner. Okay, so maybe just without further ado, let us just delve into the talk today, because it's just a very short sharing session. So I am sure most of you here are seasoned investors, you know the different types of debt financing available. So we have the traditional debt financing, your bank loans, bonds, leasing, hire purchase, PCVE funds. But today we're going to talk a little bit more about the new kid on the block, okay, P2P financing. It came around 2007 when SC, our Securities Commission, introduced a new chapter in the RMO guidelines to regulate P2P financing. And just to share a little bit insight on how P2P financing came about. So traditionally, say if I am business operator, say I'm a laundromat, I want to get a loan, I need to buy washing machines, okay? And traditionally go to a bank. But as we all know that bank would have higher requirements. In order for you to get a loan, you need to have strong credit credentials. The bank will require you to provide a lot of securities to secure that loan. And you may not necessarily have that kind of security or the credit credentials to meet that kind of requirements. Bonds would definitely be out of the question because you're just a small laundromat. So you won't be able to meet the requirements of issuing a bond. Plus, you know, bonds involve very high costs in its issuance. So there is a real gap in the market. So where you have these SMEs who are unable to obtain loan to grow their business. Okay, and that's where P2P financing kicks in. Okay, so what it does is that you have the issuer, borrower. The issuer borrower now says that, okay, I need, say, 100,000 ringgit because I need to buy new washing machines for my laundromat because all my washing machines are old. I'm not able to carry on my business in a proper manner, efficient manner, right? So go to the bank, chances of getting a loan is slim and it's also a long process. You don't have all the relevant securities to provide the bank. So the alternative now one of the things that you can consider as the borrower, go to a P2P platform operator. Of course, there are requirements under the law whereby SC kicks in to say that I'm not just going to allow anyone to go operate a platform because I'm going to place stringent requirements on the P2P platform operator to make sure that they comply with certain obligations in operating that platform to protect investors and public interest, right? So the P2P platform now will conduct a KYC on the issuer. Okay, so the AMLA checks, the KYC, all these things will be done by the P2P operator because they're obliged by law to do that. Okay, they have to do that due diligence on the issuer before they allow the issuer to be onboarded on their platform. Then next, the issuer now will tell the P2P platform, I need 100,000 ringgit for my business because I want to buy washing machines. Okay, P2P platform operator now would need to verify. Okay, verify the purpose of the loan, verify the business of the issuer to ensure that whatever that the issuer submitted, okay, to the P2P platform are accurate. The information and the documents are accurate. And after that, once everything is done, the P2P platform operator will assign a risk scoring, okay, on this campaign. Then the campaign goes live. Okay, the campaign goes live on the platform. As investors, you log on to the platform, you'll be able to see the list of campaigns available on the platform. Depending on your risk appetite, depending on the type of investment you're interested, you can click and choose, okay? And because P2P platform, P2P financing allows you, some platform allows you to invest as low as 50 ringgit, 100 ringgit. So it really enables you to diversify your investment to capitalize on your risk, you know. So you don't have to put your whole 500,000 into just one note. You are able now to say that, okay, for this type of investment, this type of rating, I'm going to invest 100,000 out of my 500,000. And for this other note, I'll invest another 200,000. So you're able to diversify your investment in that manner. So now, after that, okay, so Okay, so we'll go back a little bit later on how the campaign is successful or not. Let's just go.
Hi, Mei Mei, sorry.
Yes.
Do you mind to maximize your screen a bit?
Oh, sorry.
No.
Okay, hold on. Let me do that. Okay, is it better? Okay.
Yes, thanks.
Okay, so now with all this, right, how does SC comes in is that SC saying that I'm not going to just allow anyone to run this business and leave the investors high and low. So I'm going to make sure that they are protected. And for you, P2P operator, to operate a platform, you need to be registered with SC under the Capital Market Services Act, Section 34. And on top of that, SC issued a guideline, recognized market operators. They included a chapter for P2P financing where it sets out the requirements that the platform operator must comply with to obtain a registration, and also minimum ongoing obligations on the P2P operator. So this is how SC tries to regulate and protect the investors by imposing the obligations on the P2P platform operators itself. Okay, as an investor, what you should do. So the first thing first, I would say that please ensure that the P2P operator is registered with SC. Go to SC's website. There is a link there on the website where it will show the list of all the registered P2P operators. So these are operators who have been approved by SC. Only register yourself and invest in registered P2P operator. There are about 14 of them today. The other thing that I cannot stress enough is that as a lawyer, read your T&Cs, right? Because you're going to be bound by the terms and conditions when you click on that button. Make sure you know what are your rights as an investor. Understand how the P2P operator conducts the due diligence on the issuer. Understand how do they do the rating process, what is the methodology. Understand what is the default management, how is an event of default being declared, and how do they manage that default? What is the recovery process? Okay, will there be rights for you to sue the borrower issuer, okay, or perhaps to go for restructuring? And of course, as an investor, you also need to know, is the note going to be secured, unsecured? What are your rights as a secured creditor, unsecured creditor? So of course, if the note is not secured, it would mean that you are unsecured creditors. And in the event that the borrower issuer goes into liquidation, your rights to repayment would only come after the secured creditors. Okay. Check the P2P platform for information. The more information the P2P platform provides, the better. Okay, so ensure that the P2P platform are very transparent with the data, transparent with their rating process, and also they should also be available on the platform, statistic on the late payment. Okay, so from there, you would be able then to see, okay, what is the default rate, okay, of issuers hosted by the P2P operators in trying to decide, okay, whether this P2P operator is reliable or not. Okay, do your own due diligence, please, because at the end of the day, you are going to be investing in the notes. Don't just rely on the information provided by the P2P operator. Do your own due diligence on the issuer as well to make sure that everything, okay, is safe, legit. Okay. Then the next thing I would say is that for the P2P operator itself, I think that it would also be important for you to know who is the P2P operator. How long have they been doing the business? Okay, are they strong in the market? How strong are they in the market? Do they have very strong investor shareholders backing? Because all this would really make a difference, because you are also going to be very careful whether or not the P2P operator is reliable, the risk of failure, okay, the P2P operator tomorrow crashing. That is a real problem, because I will share with you later examples of some P2P operators who actually shut down because the whole platform collapsed. Okay, so look out also for higher rating borrowers if you are a little bit more risk adverse. Okay, so higher rating borrowers would mean that their credibility, their credit rating is better. Liquidity. Okay, so for liquidity, Generally, I would say comparing, let's say, P2P to bonds, the tenure for P2P is much shorter, it's more liquid, typically between what I've seen in the market, 3 months to 36 months. So it is a much a shorter tenure. If you're concerned about liquidity, look for a P2P operator that also offers secondary market, which will allows you to now sell your notes on the secondary market prior to maturity. There are some notes which also provides for early exit repayment by issuers. That would also, of course, improve the liquidity of your notes. Most importantly, always seek independent advice before investing. Some of the risks that you might also want to consider when you invest in P2P, to me, would be the real risk would be the credit default risk. Okay, so as I mentioned, because today you're just going to be relying on the rating process and what the P2P platform operator have do and provide the information, and based on that information, and a lot of times, a lot of the operators out there, I think P2P financing is actually unsecured. So in the case of an unsecured note, okay, in the event of default, what are your rights? Okay, the risk of default is high, and what is your rights following the default? So as I mentioned earlier, try to practice diversification, try to invest in multiple sectors, multiple ratings, multiple borrowers for multiple purpose, and even across different platforms. So to spread your risk, okay? Platform failures, we're going to talk about it a little bit later. So next slide. Okay. Okay, so this is some of the obligations which the SC imposes on a P2P operator. This is part of the safeguards that SC imposed to make sure that the P2P operator will do its job. For example, most importantly, they must have an efficient and transparent risk assessment framework. Risk scoring. How do they do the risk scoring? P2P operator must do background checks on the issuer. They must do assessment on the issuer's creditworthiness, and all issuance must be rated by the P2P operator. P2P operator will be accountable for the risk assessment. So this is very important investor protection that the law has laid out very clearly for you. And on top of that, a P2P operator must do all the necessary verification to verify the business proposition, the purpose of the loan, okay, verify all the documents that have been provided by the issuer borrowers to ensure that they're accurate, okay. There are also some minimum requirements that the P2P operator has to ensure while onboarding the issuers. For example, there's no winding up, no bankruptcy, not sanctioned, not blacklisted. This is just a slide to show a general flow of how things work. After you register as investor undergoing the KYC, then you can see the list of campaigns that are live. Make your decision, okay, informed decision, subscribe for the offer. Your money goes into a trust account. So this is another safeguard that the law has provided, whereby a P2P operator, you must open a separate trust account to hold all the money of the investors. So the money goes into to this trust account that will be managed by an independent trustee. So this is also important because in the event, say for example, right, the P2P operator were to collapse tomorrow, the money inside the trust account is ring-fenced because these are monies belonging to the investors. It is not the P2P operator's money. So the liquidator cannot then say that this money belongs to the P2P operator and goes to P2P operator's creditor. No, because these money are really the investor's money. They're not P2P operator's money. The campaign period. Okay, so as we mentioned just now, so there will be a campaign period, say for example, trying to raise 100,000 to buy washing machine. The campaign period is 30 days. Okay, so at the end of the campaign period, the question is that, is it successful or not? Okay, whether or not it's successful, did it hit the minimum principal amount? Okay, the minimum principal amount set by law is 80% of the amount that you requested. So say, for example, if you are requesting for 100,000 ringgit, if by the end of 30 days, you only achieve 70,000 ringgit, the campaign is not successful, okay? All monies will be refunded to the investors. If at the end of the campaign period, you hit, say, 80,000 to 100,000, campaign is successful. If you hit above 100,000, it is successful, but the excess has to be returned to the investors as well. So the issuer cannot keep the excess. So say, for example, at the end of the campaign period of 30 days, the amount reached is 110,000. So the investors, the issuer can only keep 100,000 because that is the amount that they requested for. The balance 10,000 will have to be returned to the investors. Okay, so unsuccessful amount will be refunded. Successful amount will be released to the issuer. There are, of course, certain requirements to be met before the amount would be released to the issuers. So this is again on the P2P platform operator to ensure that all the conditions are met. So once the principal amount has been, the target has been achieved, so there's something what we call the investment note. The investment note is issued, okay? So the investment note is really an IOU between the investors and the issuer. So the issuer is telling the investor, I owe you this amount of money, and this is how I'm going to repay you. There will be a repayment schedule in the investment note. The investment note will also set out who are all the investors, okay, to this investment note. Then in regard to the investment note, the P2P operator would also need to ensure, like I mentioned, that all the conditions are met before they release that 100,000 ringgit raised to the issuer. So one of the conditions is that they must actually ensure that there is no material adverse change. Okay, so say for example, if prior to the release of the 100,000 ringgit, the laundromat, okay, went into, there's a winding up petition. Okay, so that is a material adverse change, and the money should not be released to the issuer in that scenario, okay? Okay, this is just some additional safeguards that the law also imposes. For example, issuer cannot be hosted concurrently for the same purpose on multiple P2P platforms. This is very important because you don't want a case whereby the same laundromat is going to platform operator A and say that I need 100,000 for my washing machine, goes to platform operator B and asks for the same 100,000, and go to a platform operator C and ask for the same amount of money for the same purpose on multiple platforms. So that is not allowed. And of course, there are also certain entities that are prohibited from raising funds through P2P platform. For example, individuals are not allowed. Companies that wants to raise funds to provide loans, to invest in other entities, all these are not allowed. Okay, and as I mentioned, funds raised are always put in a trust account and administered by an independent registered trustee. Okay. Additional safeguards as well provided by law. This is just some of the basic things that SC expects the P2P operator to comply with. For example, if there is a technology cyber incident, okay, so it is necessary, the law mandates P2P operator, you must take immediate actions to mitigate. Okay, and on top of that, you must immediately notify SC and submit a report to SC. Every 3 years, P2P operator must conduct an audit. If there is any gaps, address the gaps, undertake the corrective measures to actually address the gaps. All these are very important because it really places a very strong obligation on the P2P operator to ensure that they are at all times in compliance with the SC guidelines. Managing conflict of interest. Okay, so SC also do not want a case whereby you have overzealous P2P operator who really wants to make their platform successful and as such encourage, encourage to increase the number of loans that are in the platform, that goes out in the platform, increase the rate of success. So they would then provide assistance, financial assistance to investors or to issuers. So these are all prohibited acts. So P2P operators are not allowed to provide any financial assistance to investors. They're not allowed to provide any funding to issuers. And on top of that, P2P operator is prohibited from investing in any investment note offered on its platform. This really for the P2 to ensure that the P2P operator would not be in a position of conflict of interest. Okay, so for liquidity purposes, so as I mentioned earlier, typically P2P investment note has a shorter tenure, typically in the market between 3 months to 36 months, which is a lot shorter than, say, comparing to a bond, right? So, but of course, to increase the liquidity, do check whether the P2P platform operator offers secondary trading. I think today in the market, not many P2P platform operator actually offer secondary trading, but the secondary trading would be very useful because if today your investment is locked for, say, 3 years, right? And you have no choice but to wait until that 3 years end for you to realize the investment. You can't exit earlier. But with secondary market trading, it allows you to now sell your rights on the platform, okay, in order for you to exit earlier. In an important aspect, I think, for all investors and something that you would want to know is that what happens when there is a default, okay? What happens if the borrower issuer failed to pay? What happens, for example, if there are other events of defaults? So, like I mentioned earlier, read your T's and C's, ensure that you read what are your rights as an investor, what are the events of default. Okay, as a lawyer, whenever we draft document, one of the very important, crucial clause that we always look into is event of default. What is the event of default? To ensure that, you know, what are your rights to call for an event of default? What are your rights when there is an event of default? Okay, so to me, different platform would have different default recovery management, different event of default. Do read them and see what are your rights. So some platform may say that, okay, a typical scenario would be when there is an event of default, like for example, the issuer failed to pay, let's say for 30 days, okay, past the due date, or there is a winding up petition filed against the issuer, then P2P operator should have a right to call for an event of default. And a good recovery management would also be one which would allow not just the right to initiate an action in court, to bring a legal proceeding in court, because sometimes that may not necessarily be the best solution, but the option of also then considering revising, okay, restructuring, revising the repayment schedule, perhaps extending the financing tenure. If it is, for example, if today the tenure is 3 months, okay, and the issuer borrower failed to pay in accordance with the repayment schedule of 3 months, perhaps, okay, revising it to 6 months, okay, is that a better solution? It may actually be a better solution, depending, of course, on the credit risk of the borrower, compared to initiating legal proceedings. The other option, of course, is that see whether your note is secured or unsecured. If it is secured, then you have the avenue also of enforcing your securities. For example, if there is a guarantor, the option of actually claiming against the guarantor, okay, that's another option that you can have. Okay, so now let's go into a case study. This is a very interesting, important case in P2P, because I think it's the first P2P financing case. It is also a landmark case for P2P financing. What happened is a very simple fact, okay? So here you have a plaintiff, the platform operator. You have the defendant, the borrower, the issuer, and you also have the second defendant, the guarantor. Issuer defaulted. So plaintiff issued, the platform operator issued notice of demands against the issuer and the guarantor, and brought a claim against them for the amount owing. So interestingly, the defendants tried to raise some points to argue that this whole contract is void, it's illegal, and as such, they don't need to pay. So the first argument that the defendants raised was the operator and the investors are not legally licensed to provide financing facilities, and therefore the whole P2P contract is illegal. Okay, so just to share a little bit, under our law, there are of course strict requirements. Okay, who can actually lend money? So traditionally, banks. But in order for banks to lend money, they need to have banking license. If you're not a bank, you can lend money. If you're in money lending business, you need a money lender's license, and that's governed by the Money Lenders Act. So that was, I think, where the defendants tried to raise that operator and investor, you are not a bank, you're not licensed, okay, to lend money, and neither are you a money lender, so you are not licensed money lender. So how can you actually provide that financing facility to me? And as such, it is illegal. So the High Court held that the operator here is legally licensed to provide the financing facility under Capital Market Services Act because they are registered as a recognized market operator under Section 34. And because of that, the registration under SC is also exemption under the Money Lenders Act. The Money Lenders Act generally requires that if you are a money lender, you have to be licensed, but there are certain exemptions, one of which is that if you are registered with SC, you are exempted from requiring a money lender's license. So, and because of that, the High Court held that it is legal, the contract is legal, the P2P financing is valid. The second argument that the defendants tried to raise then was the interest charge were exorbitant, it is too high, it is illegal, 15% interest in this case. And again, the court say no, because there was clearly in the contract what you have agreed to. And just an important note, just to point out as well, the IMO guidelines do provide that interest rate cannot exceed 18%. So the 15% is very well within the cap imposed by SC. The third argument that they tried to raise is that the operator does not have locus standi to bring an action against the defendants because they are not the investors. Okay, and again, here the High Court held that the operator, the P2P operator, has locus standi because the investment note makes it very clear. There is a clause in the investment note that provides that the P2P operator can actually bring actions as agent of the investors for non-payment by the issuers. So all in all, the case, the decision was a welcome by the P2P community because it really entrenched that P2P financing is valid, legal in the eyes of the law. Okay, so next slide, my last slide again. For this, just to share with you, as I mentioned earlier, platform failures. So platform failures is very real. So important for you to really conduct your due diligence, your checks, okay, on the platform operators. Who are they? How do they conduct business? How do they carry on the due diligence? How transparent they are when they share information with you? And then who are the investors, shareholders backing up that platform operator? Because you want to ensure that the platform operator that you are going to trust is really trustworthy, right? So they won't do a shoddy job. They're going to do their duty appropriately. They're not going to mismanage the funds that you invest in. They're not going, there will be no fraud involved. They will do the KYCs and the AMLA checks, all in accordance with the requirements of the law. So in Capital Springboard, this is in Singapore. Capital Springboard, they do invoice financing. It's a Singapore crowdfunding company. So what happened was one borrower actually created a lot of fictitious invoices of up to 6.9 million Singapore dollars. So these are all sham invoices. They are non-existent. So in this case, you have investors then investing in sham invoices because these invoices don't exist, right? They are really fictitious. And from the funds raised from the investors, the borrower actually splurge it on herself, on luxury goods, or on overseas trips, down payment for condominium, buying a BMW, gambling at Marina Sand-based casino, so things like that. So when it was all uncovered, of course, the director was sent to jail. They tried to recover the money, but not all money was recovered, unfortunately. So as a result of this case, MAS in Singapore also strengthened the rules and the requirements for due diligence when it comes to invoice financing platform. The second case, Lendy in UK, this is another P2P provider, UK P2P provider. So it collapsed, went into administration. So what they discovered was Lendy provides very, very little information on the processes, on the issuers, on the borrowers. And at the end of the day, they have about 160 million pounds of loan in their books, out of which 90 million pounds was in default. So that's why the company went into administration, collapsed overnight. The last one that I want to share is Reverse in UK. Again, this is not P2P. It's a UK crowdfunding company, equity crowdfunding. What they do is they missold the financial products to the investors, over-promising, right? They promise things like returns of 10 times, okay, within a short period of 2 to 3 years. And in the end, they raised about 800,000 pounds. And again, the company went into administration. So just beware, be very careful whenever you invest. I would say, please do your due diligence check, okay, on the borrower, on the industry, on the purpose of the loan, okay, on the platform operator that you're going to trust your money with. And then ensure that you read the terms and conditions, okay, when you tick that box, because I do know that a lot of times it's just very convenient, right? That when we go onto the platform, we just tick the box without actually reading the terms and conditions. But do note that once you tick that box, all those terms and conditions that you have agreed to will be binding on you. Yeah, I think, yeah, that's all for today. Thank you, everyone.
Thanks, Mei Mei. Really appreciate the insightful dive into the legal aspects of P2P financing. Now, just before we open up to to the audience, if you have questions, please key in your questions into the Q&A. I really appreciate that. So before we open up to the Q&A from the public, just some question, some curiosity. As you mentioned about the case versus Modalku, as you mentioned, there in Malaysia, there are actually three ways or legitimate ways. One is the typical bank borrowings. The other one is the money lending. Of course, the third one is the P2P or the RMO guideline. Now, let's just say that, two individuals, they sign an IOU kind of agreement. I lend you money, you pay me this, very typical of this private arrangement between individual or businesses. Can they actually enforce this IOU at the court if something goes wrong?
Okay, so that's a very interesting question. So the law says that if you are in money lending business, you need to have a money lender's license. So then, of course, in the next question, some people may try to argue that it's a one-off loan, so it's not money lending business. But there have been cases where the court said that even an isolated incident could be money lending business. So what I would always advise my client is to look at the exemptions in the Act. So there is a list of exemptions where it would actually provide instances where you fall outside the scope, right? For one example would be interloan company where you are not charging any interest rate. Yeah, that's one way of getting out of it. Yeah.
Right. And of course, based on your background, you are an expert in fintech. And as SE tries to develop this alternative space, we see more of the different digital evolution of ECF, P2P, or even IEO as well. So how do you see the rise of fintech and digital platform really impacting the legal aspects of fundraising?
I think the rise of fintech, the change to the global economic trends really push out all these financial fintech innovations. Very interesting, because like I mentioned, there is a real gap in the industry, right? Traditionally, you have your big boys will be able to get go to the banks to get your loans and all, and your sophisticated investors will be able to invest in your PE funds, etc., your bonds and so on, because some bonds are only open to sophisticated investors. So there is this untapped pool of SMEs, borrowers, they are not able to get loan. And there is this pool of untapped investors, retail investors, who are not able to invest because there's no avenue for them to invest. So I think it's very interesting, because seeing that there is a gap, and that's where I find fintech very interesting, is every time that there's a gap, underserved market, that's where fintech comes in. So it not necessarily challenges the traditional players, because the big boys who wants to go for their loans will still go for the loans and the bonds, but it is an avenue for those untapped pool of investors and also SMEs, where before this, if they are not able to get loan from the banks, if they're not able to invest, or they have very limited options of investment, there's this additional fintech products with allow, like P2P, right? Which allows a retail investor to invest as low as 50 ringgit, and they're already an investor. But prior to that, there's no such avenue for them. And of course, with this rise of fintech, there's also rapid changes in the law, and I would say that the fintech evolution is moving much faster than the law, and that's where the building that connection, that relationship with the regulator is also very important, because on the one hand, you have a lot of gray areas because they are moving very fast, and the law has not caught up fast enough to regulate these areas. And you do not, it's good to have regulators who want to protect the public, but at the same time, you also want to ensure that there is a fintech innovation, and that innovation is not stifled by too many regulatory guidelines and requirements. So that engagement with regulator is something that I also find that with this fintech evolution is very important, so that we also ensure that when we speak to our client, what are the real problems, issues that they face? We bring this, discuss with the regulator, what are the solutions, and also to ensure that the regulators are not overzealous in protecting the public and then in neglecting, growth. But at the same time, we have to balance between protection of the investors and the public as well. Yeah.
I guess the most important is that it's a loan, whether it's fintech or whether it's bank. There is the process could be a bit simplified, but in terms of legal substance, it still very much remains the same. I mean, most important, we safeguard the investors' rights under the financing arrangement. I guess my next question really is that what are some of the common legal pitfalls that you observe, like typically for investors or lenders, they encounter during a debt fundraising process? I know you during the presentation you mentioned like you must do this, you must look at T&C, but what are the common that you see in real life legal pitfalls?
It's the enforcement, yeah. So because at the end of the day, your contract will provide you with the rights, correct? So if there's event of default, this is what you can do. And then again, some contracts, okay, does it allow the investors to participate, okay, in, let's say, do they have a say in the recovery process? For example, if you're doing a restructuring, will their voice be heard? So, or is it a case whereby the P2P operator is just going to decide everything for you? Okay, this is it. I'm going to be the one deciding, and you don't have a right to say. Or is there an avenue for at least some sort of deliberation, consideration being given to the investors? I think that's important, because at the end of the day, it is your money. But at the same time, you also do not want a case whereby the platform operator is totally bound to hear what the investors say, that so much so that, if there's no agreement, there's a stalemate and things are not moving and you cannot progress with your default recovery. So I think there is a balance whereby it would be good as an investor for me personally if I would have a right to say how I want the recovery to take place. For example, if I'm the investor and I think that the issuer borrower have pretty okay credentials, credit risk is still okay, perhaps it's better to go for restructuring. And can I push for a restructuring instead of, a legal action? Then, of course, the second thing to me is also security. Whether or not your note is secured or not. If your note is not secured, right, what's the worst thing that can happen to every single investor is that the company goes into liquidation and you really rank below at the bottom of the priority list, because the banks, the secured creditors will always get the repayment first before you. And at the end of the day, you may be left with nothing. So while there is that clause in the agreement that says that you have recovery rights and you can sue, you can even try to wind up the company for not paying you, but will you really recover anything out of it? So I think that's something that a lot of the investor would face. So of course, if possible, I would say choose something that is secured, because then at the end of the day, if there is a default, you would be able to go after the security. If the company goes into liquidation, then you rank as a secured creditor as well. So otherwise, you can have all the beautifully drafted clauses to protect you in the agreement, but in reality, it really means nothing because you don't get your money back at the end of the day.
Thank you for that. Really on a personal note, you've been a lawyer for so many years. Again, what really keeps you awake being a professional lawyer?
My interest in what I do. I think it's important that I must like what I do. Yeah. So because I spend most of my time in office at work. So doing something you like is, I think, one thing. And then doing what you like. And because fintech space I mentioned, it's fast changing, it's very fast paced. I need to also make sure that I keep myself updated with the new products, the new fintech innovation products that come in, and what are the pros and cons, understanding the products, and also keep up to date with the changes in law, not just the law, but also case laws and what's happening outside Malaysia, because a lot of times these products are not going to be new in Malaysia. They would have been introduced elsewhere. Say, for example, like P2P was in UK, Singapore before it comes to Malaysia. So looking at case studies, see how things are done outside, what are the issues faced by real life issues, and all this would also give me some perspective when it comes to advising my client, when it comes to drafting my contract. For example, if the case law says that, okay, you need to look out for this, or if this particular case, the argument was defeated on that ground. So then, of course, you need to think, okay, you need to make sure that you will not put your client in that position. How do you safeguard your client? So that will all go into drafting, and also part of trying to strategize with the client to come out with the proposed business. When the client comes up with the proposed business, how to tweak it a little bit here and there, yeah, based on our regulatory requirement and to safeguard their interests.
Sure. Thanks. Okay, before I pass to Kai or let you, just want to, how can people find out more about you? I know you just shared that particular contact. Can they look out for you in LinkedIn or something?
Yeah, sure, they can. I believe it's my full name on LinkedIn, or you can go to my firm's website, Darryl Loh. The details would be there. Yeah, so perhaps I'm not sure whether I would be able to share my name card with everyone on the chat room.
No problem. We can actually email the attendee about
Okay,
your
sure.
contact details on that. Okay, I think Kaya, pass back to you to just coordinate any Q&A from the public. Thanks, Mei Mei. Thank you so much.
Yeah, thanks, King Sing.
Thanks, King Sing. Okay, Mei Mei, there's one question for you from the ground. What is the worst consequences for investing in unsecured investment note?
Unsecured investment note.
Mm.
I would think that, okay, so I think I mentioned briefly just now, if it is unsecured, in the event that there is a default, right? So you don't have any security to rely. So say for example, if today your note is secured and there is a guarantor, for example, who guarantees the repayment. If the borrower doesn't pay, you can go after the guarantor to make the guarantor pay. So you have that alternative avenue to recover your money. Or if let's say, for example, a classic example of a land charge, right? If a land is being charged as security, if there is a default, it allows you to go for foreclosure, order for sale, foreclose the land, sell the land, recover your money from the sale, the proceeds of sale. So that's where secured notes would definitely be better because it has that additional avenue for you to actually recover your money. As opposed to unsecured, really all you can do is sue the issuer borrower for the money. And what if the borrower issuer doesn't have any money? You can file and wind up the borrower issuer. But like I said, at the end of the day, whether or not they're able to pay you is another matter. Because once you go into the borrower goes into liquidation, right? Then you have this whole list of people. Chances are you're not the only creditor. There will be other creditors. For example, it may have got a bank loan, all right? And bank loans are usually typically secured. So the banks will be a secured creditor. So in terms of ranking of priority of repayment, your repayment will only come after the banks and all the secured creditors have been fully paid. And whatever is left, if there's anything left, that's what you'll get. So that's the real pitfall of being an unsecured creditor.
Thank you, Mei Mei. I think there's one question saying that one of the slide mentioned about investor defaulting. What are some example when I think issuer default? I think is
Okay, I'm not sure whether it could be a typo. It should be
Mm.
issuers defaulting. So if you're talking about examples of issuer defaulting, I would say a non-payment, for example, because there will be a repayment schedule in the investment note, which will say, let's say, for example, you have to pay X date, Y date, right? So if non-payment usually will be a default, the contract will provide. So say, for example, if the payment is not received by the due date, and perhaps, I give you a notice, 30 days, to rectify, and you still don't pay, then I can declare an event of default. So that is one example of event of default. Other things could be, say, for example, if there is adverse change in your business, material adverse change in business. For example, you need, let's say I'm a school, I need my license to operate my school. And if that license is being revoked, I would not be able to operate my school. So that is a material adverse change, which could be an event of default if material adverse change is an event of default. Or it could be that you've been filed, there's a winding up petition against you. Now, that's again an example of event of default. So usually it will be things that would affect the rights, the repayment by the borrower issuer.
okay. Thank you, Mei Mei. I think we will quickly wrap up the webinar. Okay. Thank you so much, Mimi, for being here with us today. We appreciate that. So just to quickly wrap through, we have a current live campaign now on the website. If you're interested, you can visit the website and register yourself as an investor and go through the issuance document before you subscribe to the campaign. So After this webinar, if you have any question or you want to drop us an email, please feel free to drop us an email at brcsupport@bursamalaysia.com, or you can scan the QR code to visit the website. Thank you so much. Thank you, Mei Mei.
Thank you, Kayen. Thanks, everyone.
Yes.
you.